Hey everyone, and welcome to this explainer. Did you know that seniors all over the world are practically sitting ducks, systematically targeted for their healthcare dollars? And we're not just talking about shadowy scammers and boiler rooms here. We are talking about massive corporate entities using legal, highly technical loopholes. Well, today, we are giving you the ultimate survival guide. We're going to help you navigate the absolute minefield of securing senior health insurance so you can protect your loved ones and for sure defend their life savings.
Okay, so here's our roadmap for today. First, we'll cover the senior exploitation crisis. Then, avoiding the deadly trinity. After that, we'll look at navigating pre-existing conditions, followed by building the perfect policy, and we'll wrap it all up with your rights and recourse. Don't worry, we're going to guide you right out of the scam zone and straight into some real actionable solutions.
Okay, let's dive right into Section 1, the senior exploitation crisis. Look, seniors are incredibly high-value targets globally. Whether we're talking about outright criminals looking for a quick payout or totally legitimate corporate actors looking to pad their profit margins, the aging population is just a very lucrative opportunity. So if you or maybe your parents are managing healthcare right now, you absolutely must recognize these warning signs. Fraudsters completely rely on unsolicited cold calls and this sort of aggressive urgency. They'll tell you you're going to lose your coverage if you don't switch plans this very minute. They'll demand personal identifiers, like your Medicare ID, your Social Security number, or bank routing info, and they often bait the hook with completely unrealistic free benefits, like luxury perks or grocery cards. But here is the absolute golden rule. Legitimate government officials, like those from Medicare, will never, ever cold call you, period.
And it's wild because this perfectly illustrates how universal the threat is. In the U.S., major corporate insurers extract extra billions from government funding through something called upcoding. This basically means artificially inflating how sick a patient looks on paper. They also use predatory steering and, literally, bill for phantom medical supplies that never existed. Meanwhile, seniors over in India fall victim to the bank fixed deposit trap, where these lifelong policies are aggressively missold as if they were safe, short-term investments. They face hyper-technical claim rejections, and you even have cybercriminals brazenly impersonating the regulatory authority, IRDAI. The tactics might change depending on the border, but the actual threat to seniors? It's completely universal.
Moving right along to Section 2, avoiding the deadly trinity.
All right, let's pivot the narrative a bit. We're stepping away from the illegal scams for a second to look at the legal but equally dangerous traps hidden right in plain sight inside actual policies. Let me introduce you to the deadly trinity. These are 3 completely legal but incredibly restrictive policy clauses designed specifically to aggressively cap your insurance payouts. We're talking about room rent limits, co-payments, and disease-wise sublimits. If you don't audit your policy for these 3 specific things, I guarantee you, they become the absolute biggest threat to a senior's hard-earned life savings the second a medical emergency hits.
Now, what's really interesting about this slide is the sheer brutal math of this trap. Just imagine diligently paying a massive 45,000 rupee premium every single year, totally believing you have a rock-solid 10-lakh policy. But, and here's the catch, because of a hidden disease-wise sublimit, if you need a major treatment, the insurer abruptly caps your payout. You might wake up shocked to find that your maximum claim for a massive hospital bill is strictly capped at just 250,000 rupees. The rest? Yeah, you're paying that completely out of pocket, despite your supposed 10-lakh coverage. Crazy, right?
And then we have the co-payment trap. So a co-payment basically means you are legally agreeing to bear a fixed percentage of every single claim. So let's say your policy has a 20% copay, and your parents' hospital bill comes out to $500,000. Boom! You are unexpectedly on the hook for $100,000 entirely out of your own pocket. These clauses just quietly and efficiently shift a huge financial burden right back onto the senior.
Let's look at Section 3, Navigating Pre-Existing Conditions.
So, let's talk about the practical realities of actually securing a solid policy when a senior already has a complex medical history, which, let's be honest, is incredibly common. To ground all these abstract concepts, let's look at a real, relatable story. Meet Mr. Om Prakash. He's 62 years old, he has a pre-existing condition of diabetes, and he is actively looking for a 50 lakh cover. The immediate fear that pops into most people's heads is, wait, will someone like him simply be denied coverage entirely just because of his health history?
Well, the highly reassuring answer is no. Insurers will not automatically deny him, and good options absolutely exist. However, you definitely need to expect strict pre-policy medical tests. Think things like ECGs and blood sugar checks.
If conditions are detected, the insurer is going to apply what's called a loading charge. So what is that? It's basically a premium hike, typically somewhere between 20 to 30% above the standard rate, just to account for the increased medical risk. It's a hurdle for sure, but hey, it guarantees you get the cover.
But wait, buying a policy doesn't just mean instant coverage for those existing diseases. Standard plans often make you wait up to 3 entire years before you can claim for something related to a pre-existing condition. Your absolute crucial survival tactic here is to look for optional riders. By paying just a slightly higher premium, you can drastically reduce that 3-year wait down to just 1 year, or, in some incredible cases, down to just 30 days. For seniors, buying that immediate peace of mind, it's an absolutely essential strategy.
Okay, moving to Section 4, Building the Perfect Policy.
So now that we know the traps and we know the hurdles, let's transition into the actual solutions. Let's talk about exactly how to build the ultimate financial shield for aging parents. First off, you need to know who you can trust, and we use raw data for this. You want an incurred claims ratio of around 80%. Let's de-jargon that real quick. It simply means if the insurance company takes in 100 in premiums, they are paying out 80 in fair claims and just keeping 20 for their operations. You also want a maximum of 22 grievances per 10,000 claims. A super low grievance number proves they actually have a reliable, smooth settlement process when you're sitting there stressed out at the hospital.
Next up, you really need to demand these essential policy hacks. First, absolutely insist on a no-claim bonus or a renewal benefit. This actively increases your coverage amount over time, literally just for staying healthy. Second, ensure you have multi-use restoration benefits. This means if you somehow exhaust your cover, the insurer actually restores it for future unrelated illnesses in that exact same year. And crucially, actually write this one down. Avoid floater plans that mix young, healthy adults and high-risk seniors. If you put your parents on your shared floater plan, you will end up paying premium senior-level prices for everybody. Plus, their higher risk of hospitalization could completely wipe out the shared coverage limit, leaving you all entirely exposed. Just don't do it.
Now, if the premiums are giving you sticker shock and getting too steep, here's a brilliant way to contrast your approach. Get a super top-up. Instead of paying an absolute fortune for a massive primary base policy, you buy a moderate base policy and you pair it with a super cheap super top-up. This is just a phenomenal financial hack that sits quietly in the background. It only kicks in once your base policy's deductible is totally exhausted, which allows you to secure massive coverage for just a fraction of the cost.
So the crucial point here is timing. You absolutely must buy your base policy and your super top-up policy on the exact same date. Why does that matter so much? Well, because if their annual cycles are out of sync and you happen to get sick during a gap month where your base policy has reset but your super top-up hasn't, you simply won't reach the combined deductible in time. And you know what that means? You will end up paying massive bills completely out of pocket. Sync the dates and you close the gap perfectly. It's that simple.
And finally, Section 5, Your Rights and Recourse.
All right, we've built the shield, but what if things still go wrong? Let's empower you with a concrete step-by-step roadmap to fight back legally. If you're ever unfairly denied a claim or missold a policy, follow this exact escalation path. Step 1. File a formal complaint with the insurer's Internal Grievance Redressal Officer, or GRO. Step 2. If they just ignore you, escalate it straight to the regulatory body, like calling 1-800-MEDICARE in the US or reaching out to IRDAI in India. Step 3. If it's still unresolved, take it to the Insurance Ombudsman. The Ombudsman is incredible because they provide free, legally binding verdicts against unfair insurers, no expensive lawyers needed. And Step 4. For any cyber fraud or impersonation, immediately lock your accounts and hit the national cybercrime portals.
As we wrap up, we want to leave you with this vital summary to remember above all else. The cheapest policy is not always the best policy. Prioritizing a bottom dollar premium while totally ignoring terrible clauses, like just accepting a 20% copay or a massive disease sublimit, is a catastrophic financial mistake just waiting to happen. Remember, you are buying financial armor. You want it strong, not cheap.
Wow, we've covered a tremendous amount of ground today. So we want to leave you with one final critical question. Is your parents' current health insurance a true financial shield, or is it just a ticking time bomb of hidden clauses? Seriously, don't wait for a hospital emergency to find out the hard way. Take what you've learned in this explainer, sit down tonight and audit those statements and policies. Stay informed, stay focused, and protect your family's future. Thanks for tuning in.